Good afternoon, everyone, and welcome to our YouTube live stream called Hot Stock Panel. Glad that you're here. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always my pleasure to be here. If you can hear us loud and clear, please type a VV Nation in the room to let us know that all the technology on our side is working. In the background, I have Joey, who is my producer, who makes sure that everything is working. Say hi, Joey. Hi. You could probably barely hear him, but that's okay. He's better heard than seen anyway. So we're keeping that in mind. What do we do at our hot stock panels? Well, we bring on a panel of guests, of instructors like myself, and we go out and we talk about stocks. We have a theme every week, every month. This month, wow, got to get my tongue working right. This month, it's all about hot stocks to swing trade, and I do have with me two of the finest swing traders in the VectorVest team, Jerry D'Ambrosio, who's on your screen, and Dr. David Paul in the UK, who is also on your screen. And when it comes down to swing trading, they are, lest I say, experts at it. Whether they want to agree with that or not, they can talk you through any trade and make sure that you know why it's swing tradable and why it's got some swing tradiosity to it. That is a Glenism. It's a new Glenism. Swing tradiosity behind a stock. So just keep that in mind. I want you to use that going forward. Hashtag swing tradiosity. The hot stock panel for this month with swing trading is all about trying to hold stocks for a couple of days to a couple of weeks. So not an overall real short-term trade. Sometimes they can be, but not long-term investments for the most part. So a couple of weeks to a couple of days, a couple of days to a couple of weeks, however you want to look at it. We're going to walk you through 7 trades. I will have 2, Jerry will have 2, and Dr. David Paul will have 3. Real quick, just to let you know some other things. This webcast will be, or live stream will be podcastable. So if you did not get to see this live or want to go over it again, these are located on any Podstream podcast place to get a podcast. Always search for, in this case, Hot Stock Panel. On Thursdays, we have Trending Thursdays. You can always look for Trending Thursdays. Down below us, we have a VectorVest store where you can get some t-shirts, mugs. I don't have a mug sitting out here. That's all Joey's fault. But if you want to get a mug of your own, look down below this video. You can get a mug. We do have a mobile application that you can look at VectorVest on your mobile screen. And last but not least, do not forget to comment, like, and subscribe to the VectorVest channel. Big thing, subscribe. I'm still noticing that more people that are here looking at our live streams, more people are not subscribers to the channel. If you like the content, it's okay to subscribe to it. And then you hit the bell icon so you'll be alerted to all of the new content as it comes up. Jerry does presentations that get relayed over to YouTube. David does presentations that get relayed over to YouTube. Support the channel, especially if you like the content. That's what it's here for. It's here for you. All right, so as I've already introduced our guests, we talked a little bit about what the panel is all about, and we do this once a month, folks, and it's great. It's gotten a lot of traction. A lot of people tune in to watch these live streams. We will have a giveaway today. We're going to give away a mug. Here comes the channel. Jerry, I know you're going to watch the channel now. Here comes the channel. If you type in the word mug, keyword mug, you will be entered in to get a mug given away for free. And we'll give that away about 2:45 p.m. Well, actually, in this case, it'll be given away at 12:45, about 12:45. All right, and now we're going to get into our stock picks. I've never been this early getting into stock picks because I talk a lot. But today, I'm trying to be cognizant of my 2 esteemed colleagues, and I want to get us started with my picks. All right, so when we talk about swing trading, again, trying to hold stocks for a couple of days to a couple of weeks, And I'm going to love the idea of having 3 different mentalities in this panel to help you understand why we picked the stocks we picked. We're going to talk about why we did it, how to know when to get into it, and how to actually get out of the trade. And we're going to teach you to not be greedy. Bears make money, bulls make money, pigs make bacon. I love bacon, but VectorVest will help you to save your bacon, and that's very important when investing in the stock market. So if you look at the stocks, here's my watch list of the stocks today. Joey, I'm going to take this down a little bit. I don't want this anymore. All right, I want to look at the full-blown watch list. My guests are able to see this as well, I believe, or maybe. Okay, so here's our 7 stocks. They're automatically sorted by our master indicator, VST. So the stock that has the highest combination of value, safety, and timing will be at the top, which will be AMD, and the stock with the least will be at the bottom. Notice that from a swing trade perspective, every stock has a VST above 1. All of the stocks are buy recommendations, so if nothing else, you can feel comfortable in the idea that we are setting you on a path for good quality stocks that you can make money, whether how quickly you want to make it or how long you want to try to make it. You're in good quality stocks, and we will break that down for you. Let's start off with the 2 stocks that I have in this list. One of them is APPS, and the second stock is Equinox Gold. All right, so why did I pick these? Well, I looked at a lot of graphs to help me to determine what I wanted, but I also tried to pick into an industry group that I really thought was going to be on the upside of breaking out, because no matter whether it's swing trading, bottom fishing, momentum trading, it's all about trying to buy low and sell high. And I think from a swing trade perspective, we're going to introduce you to that fact of why we think that these are good opportunities or good times to get into these stocks. We're going to analyze them, and for people out there who are not VectorVest subscribers, Joey is going to type a link in the chat for you that you may, if you want to, you can take a trial to the VectorVest software for 99 cents for 30 days, which I think is a tremendous deal. All right? And we're going to use the power of the software to analyze these stocks. One of the things you will find in the VectorVest software is that we apply an intrinsic value to every stock. It's going to help us to determine whether the stock is under or overvalued. Our mantra overall is to have you in safe, undervalued stocks that are rising in price in a rising market. Now, the key thing about that undervalued part is that just because a stock may be overvalued doesn't mean that it's a bad stock, especially from a swing trade perspective. So the stock APPS is trading at $23.65. This is a stock that has been on a tear. It's pulled back and could be prime opportunity to start thinking about getting back into it. The value is at $19.62, so the stock is considered to be slightly overvalued. But keep in mind, just because it's overvalued doesn't make it a bad stock. Let's move over to the indicators that separate us from everybody else in this industry. Our indicators, our core proprietary indicators, which are all cast on a scale between 0 and 2, we make it easy for you to understand the indicator. If the indicator is above the value of 1, it's favorable. If it's below the value of 1, it's unfavorable. First indicator, relative value, RV. This looks at a stock's long-term price appreciation potential. That over the next 1 to 3 years, how will this stock fare to an alternative investment in a AAA corporate bond? You buy a bond, it matures. After it matures, you get all of your money back with a small interest. It's not a gangbuster trade, but it's a relatively safe trade. Relative value will tell us, should this stock outperform or underperform that AAA corporate bond? Well, we can see it's clearly above the value of 1 at 1.69. It's got good upside potential. The next indicator, relative safety, RS, is an indicator of risk on the stock. Relative safety looks at the consistency and predictability of a company's financial performance. A company that consistently meets or exceeds its earnings expectations quarter over quarter and year over year are very attractive to investors. And the next indicator, RT, which looks at the short-term price trend of the stock. It's relative timing. JD, can you take that off for me? I don't want that up just quite yet.
You got it.
All right. No, there you go. Thank you. All right. Relative timing looks at the short-term price trend of the stock. Is the stock in an uptrend or not? RT above 1 tells me the stock's in an uptrend. The higher above 1 it is, the faster in an uptrend. So RT is at 1.58. This stock is not only in an uptrend, it's in a nice uptrend, and it's got a VST of 1.48. The stock is a buy recommendation. And something else that I like about it, it grows its earnings at a clip of about 50% a year with our earnings growth. I like that. All of those things put together, even though the stock is slightly overvalued, these are things that make the stock attractive. Now all we need to do is time it, okay? Equinox Gold, trading at $13.15 with a value of $26.74. Clearly undervalued. Upside potential is at 1.77 on relative value. Stock's got good upside potential. This should help a lot of you out there who are still wondering if gold is a good play or not in regards to Equinox having good upside potential compared to a AAA corporate bond. Now, I'm willing to assume some risk with relative safety below 1. I like the good upside, but the relative safety below 1 says I'm willing to take some risk on to put this trade on. Relative timing at 1.55. The stock is definitely in an uptrend. And another indicator, CI Comfort Index, the stock's ability to withstand long and lengthy price declines. So I analyzed it. Equinox has got an earnings growth rate of 48% a year. Both of the stocks that I picked are good earnings growth plays. I like that. And let's take a look at those graphs. So that was analyzing the graphs. And for those of you who are not subscribers to the software, that's as quickly as you can go through and make an intelligible decision about a stock that you're thinking about getting into. So as I look at Equinox Gold, I'm looking at a 3-month graph. You'll see 2 moving averages on them. I like the 3 and the 8. Whether I am a trader or trying to be a swing trader, I think it does a good job. Those moving averages do a good job of showing you a trending stock. When the 3, which is the green line, goes below the red, which is the 8, that's a good opportunity to take profits. All right, but look at the longacity. Look at the longness. Look at the trend of the stock using the 3 and the 8. I think it does a good job, whether you're trying to hold it for a couple of days to a couple of weeks. And it also keeps you from panicking when a stock's price goes down. Look at that, the 3 and the 8 hold. All right, for those of you on podcast, you can always look at a stock's graph, put the 3 and the 8, whatever moving averages you like. And I'm looking at a 3-month graph. I think a 1 quarter worth of graph is enough to help me to make a decision from a swing trade perspective. Now, looking at it more recently on the subgraphs below, we have relative timing. We have the RSI, which is a technical indicator to help me to know when a stock is overbought or oversold. And I'm looking at CI, the comfort index, the stock's ability to withstand long and lengthy price declines. Notice that the smoothness of the graph from the bottom left to the top right over the last 3 months, CI has never fallen below the value of 1, telling me that this stock has got a lot more smoothness behind it, more so than volatility. I like the bottom left, top right. The stock is recently coming off of a high. Even with the pullback, the 3 and the 8 did give you a solid sign to get out here. If I look at that date where it crossed, looks like on or about 8/24 of 2020. Look at all of the time you were in the stock. Take the profit when it gives you the opportunity to take it. And what I like about it now is look at these wicks on these 2 candles over the last few days, forming a beautiful level of support that the stock is bouncing off of. Notice that the 3 and the 8 just recently crossed over the last couple of days as well. Nice open candle today. The stock is not at a level of being overbought yet. The CI is back on the rise after the stock did pull back. High CI stocks will pull back, but high CI stocks have the ability to be resilient enough to resume going back up in a short amount of time. From a swing trade perspective, I like those things. Coming off a level of support, the 3 and the 8 crossing, CI staying above the value of 1, the stock's RSI telling me that it's not overbought at this particular point in time. Relative timing, though, started pulling back, but look, if you drew a line connecting the highs on RT. We briefly just got above that little bit of a downtrend on relative timing and now moving higher. I like the stock. I would say it's a good stock to get in now. The stock is trading at $13.12. I would put in a stop order about 5 cents higher than the high, which is today's candle, to make sure or ensure that I'm buying into a rising stock. Now, it's got a level of headwinds sitting at the high at about the price of $13.66. I would start getting wary about there. And you know something, if I've made a little bit of money over the next couple of days, maybe take half off the table to see if the stock has got the wherewithal to break through that level of resistance and continue to move higher. A graph is worth 1,000 words. I look at the story that the graph is telling me. The story is a good one, and hopefully it will continue to be a good story going higher. But I like the stock as a pick now to try to hold for a couple of days, possibly even longer. All right, so we're going to do some analysis with my panel, starting with David. David, you have anything you want to add to it or put behind it?
Yes, good day, everyone. I'm David Paul. I'm the Managing Director of VectorVest here in the UK, and hopefully there's a few UK people in the room. Glenn, first of all, the bullion price looks very strong today. Both bullion and bullion gold and silver have been pulling back in a symmetrical triangle. And it looks, silver especially, as if silver is going to break up from that. And many people are talking about an upside. The fib target from that triangle will be certainly well above 2,000 on the gold price, up to about 2,300. I like the way the share's in the trend. I like the way it's pulled back to the last old top. And it's, in fact, the tails on those two candles are pretty much at the last old top. And that's what candlestick analysts refer to as a tweezer bottom, and that looks very strong indeed. It's what a hero of mine, a guy called Richard Wyckoff, used to call a sweet spot, where the market pulls back to the last old top. As you can see, it's been trading in there for a very long time, so the market's very fond of that particular level. Looks good to me. Looks very good to me. Relative safety is a bit low because clearly a gold mine is prone to the ups and downs of the gold price, and that has been quite mercurial over the last 5 years. So I'm very positive about the future of gold, and certainly, although I'm not talking about any gold stocks this afternoon, in my longer-term portfolio, I've got quite a strong allocation to gold and silver at the moment. So I love the share, yeah.
Jerry?
Couldn't have said it any better myself. David hit all the points. Recent pullback, stopped right at that most recent high there, back at the end of July. I'm a big candlestick analyzer. I love analyzing candlesticks. Anytime I see long lower wicks in a down move, particularly when it reaches a level of support, I can kind of really consider that most recent high there at the end of July, beginning of August, a level of support. If you look back at that level, you could see the long upper wicks, right? So you're in an uptrend, and those long upper wicks kind of tell you that the uptrend is losing momentum. Sellers are able to close price closer to the lows of those sessions. In an uptrend, that's not bullish, that's weakness. Stock pulled back for a couple of days, but then eventually resumed the uptrend. But what we're seeing now is a pullback, and buyers now coming in and pushing price off of those lows, not quite near the highs of the day, but quite a bit off of the lows. You got a nice 3-8 crossover. Relative strength index is interesting because, like Glenn said, if it's below 30, that's oversold. Above 70, that's overbought. Well, when it's in between and rising, that is considered a trending piece of analysis, a trending environment. Rising from below 30 to above 30, you're exiting out of an oversold condition and entering into a trending environment, and that's kind of where we stand now. New trend, 3-8 crossover, so love everything about it.
All right.
I think that, Glenn, when you see tails and candles, especially where old resistance became support, that's invariably a sign of very strong and smart institutional buying. With respect, the man on the street rarely buys at support. They invariably buy after there's a green bar. And as you can see, the market stopped and there was a green bar. And then what happened is that the smart money took it right back and run the stops, which would have been underneath the green bar before it goes again. So tails and candles invariably a sign of institutional accumulation. And also I think that if you were to take the time to draw a trend line along the lows on the way up over the last 4 or 5 months, there's a pretty strong trend line underneath those lows, even going back much further than that, Glenn.
So June,
there's a strong trend line there, and what you actually get at that point is a confluence of where support, where resistance became support on a long-term trend line. And I can pretty much guarantee that if we had the time and put on some Fibonacci levels there, that there'd be a 62% retracement there as well. So, and that's putting together that confluence of support and resistance via old resistance becoming new support, a long-term trend line, and Fibonacci is pretty much what I teach at one of the things I teach on the precision swing trading course that I do with you guys. I haven't worked on Wall Street, but I've worked in the City of London. I've worked in the dealing floors in Johannesburg, South Africa for a very long time. And I know that the institutional traders employ those 3 techniques to try and work exactly where to get in. And they will be buying at the level, not waiting for any form of confirmation. So getting it, and the level there, clearly it all runs around the big number as well, and there was a 12 there. So a lot of things coming together at that particular level, and it was actively accumulated there. So anything can happen, and clearly if the gold price in fact takes another leg down before it goes again, that will cause the share to come back. But the probabilities of success are firmly at your back. I would give that a 70-30 probability of moving strongly up.
And you know something to add on to that level that we keep talking about as formal level of resistance, current level of support. God forbid you get into the trade. Jerry, would you not say that that's a good line in the sand to get out of the trade in case it falls against you?
100%.
There you go.
Those 2 lows probably are smack dab right at about $12. So
it's to be exact. It's at 12.11.
Yes. So a few cents below that. Absolutely.
Excellent. All right, I'll give you guys both my $20 for saying nice things about that stock later. All right, let's go to my next stock, which is APPS, APPS. This one was a stock that was slow to rise, but it rose nonetheless. There was a little bit of trepidness. I don't want to make a Glenism out of that, just don't want to. But the 3 and the 8, even with that, did give you, as the stock begrudgingly rose, gave you an opportunity to still make some money in it. It then moved sideways, but then look at the explosiveness. Look at the explosiveness, the 3 and the 8. The stock was getting out of a level, wasn't even at a level of being oversold, but it was, as Jerry mentioned, in the trading level. And man, that stock took off. RT was already in the background saying, just be patient. The stock is in an uptrend. Just be patient, and then look at the CI. As the stock's price really started moving, it showed that it was it wasn't susceptible to long or lengthy price declines. I like a couple of these indicators you can find anywhere. You can put moving averages on any software. You can put RSI on any software, but our other indicators like relative timing and CI are only found in the VectorVest software, and it does give an added sense of more confirmation behind the decision that you'll make. So the stock took off. This had been one of the stocks that we've looked at in the Jockey Club time and time again, which is our trading room, and the stock ran. All right, using the 3 and the 8, getting out when the 3 crossed below the 8 was a great opportunity to not be greedy and not have to wonder when to get out of the stock. All right, boom, it fell again. Another level of support was created. All right, after 4 days, 5 days of falling, we started moving back up. Now, my only issue with this stock is the 3 and the 8 haven't crossed yet. All right, this is something that's on my radar as another opportunity, not ready to pull the trigger yet, but it met the criteria of what I was looking for. I want to show you something else. You notice that we have a down day today? Look at relative timing. Relative timing again is in the background saying, be patient, I got you. Because price moves RT. RT doesn't move price. Now the stock's price is moving down, but RT is rising. That's definitely a bullish indication. And all you got to do is wait. For me, as I give out to you, I would really wait for confirmation of the 3 going above the 8. I love the stock's ability to withstand longer lengthy price declines with the CI above the value of 1. But this is a stock that's on the radar. And if the 3 does go above the 8, boom, pull the trigger. I don't think you need any more confirmation in that. That's just all you need, especially knowing that RT is rising as the stock's price is falling today. So that's what I'm looking for on this stock. It's a setup. It's not actionable yet, but it is a setup. All right, David.
Yes, Glenn, well, it's been a great stock, that's for sure. I think that where it's sitting at the moment, if you go back just after the gap up, there's 3 days where it made a high, pretty much where it was at the minute. Those 3 days that you've got your cursor on there, and that level, just on those 3, just around those 3 days, the market's come back and kissed that level. And I agree with you, there's an awful lot of fresh air there. The nice thing about this stock is that if the stock breaks up now and breaks up through the last high, it would mean that the bottom charted 2 days ago is significantly higher than the last top. And if you go back to 1880, that's what Charles Dow referred to as a fast trend. So pretty much the only time I like to trade breakouts is when there's fresh air between the last bottom and top. So there's the last top, and where you've got your cursor right now would be the last bottom, somewhere there. And if it breaks that high, that's what Charles Dow would call a fast trend. And I think that will motor. I think you could precede that by using your 3 and 8. So pretty much the only time I actually like to buy breakouts is if I see a fast trend. And that's how Dow referred to a fast trend, a bottom, a new bottom, which is significantly higher than the last top. If I could ask you to do one thing, Glenn, would you mind sort of messing up your chart by putting volume onto that?
Sure.
Would that be... Because I think that from memory, I don't own this stock, folks. It actually moved too fast for me. And if you put volume on here, you can see that the volume really took off during those up days. The volume down is a little worrying, but now as the stock is pulling back, the volume is drying up. And that's a good sign. And you can see on that green day, which was yesterday, I presume that was, that was Friday, that on the up day, the volume went up a little bit, which is very positive indeed. So I think the stock looks great. The earnings per share, the growth rate, earnings growth rate is 50%. If it breaks up through that last high, I think that stock's really going to motor. And I'm going to seriously look at it over the next couple of days, as you suggest, yeah.
JD?
Yeah, just, I mean, you guys have said it all. Just in terms of an entry, so we haven't really talked about where to enter if you're not in right now. Use today's high, right? So we're a little bit off of, we're actually nearer to the, closer to the low of the session. Glenn, if you were to close that, scroll up over there, yeah. So the low is 22.46. The current price is 23.98, and the high is 24.55. So, we really want to see this most recent couple of days, yesterday, following through into today. The momentum continues. So 24.55 would be my trigger price. Anything above there, 24.60, 24.65 would be a good entry. And the most recent low there, the swing low that we are pulling off of, should be your initial stop. And that's really kind of all I would add there.
There you go. All right, so those are my two stocks that I picked up for this panel. Hopefully we've walked through what to look for and possibilities. And keep in mind, I'm with them as well. I'm thinking that APPS is more so on my radar, especially knowing what the stock has done most recently in the last month or so. It went on a tear. It could be setting up for that right now, especially bouncing off of that bottom. And I learned so much from Dave when I listened to him. What did you call this? A fast track?
It's a fast trend.
Fast trend.
This is Charles Dow's work from 1880 in the Dow theory.
Oh, I was alive back then, 1880.
I shall ignore that. We had a fast trend. A normal trend is where the bottom pulls back to the last old top. And then what he called a creeping trend was when the bottom interferes with the last old top. And that a fast trend is fine for breakouts. If it's a normal trend, you want to try and buy the pullback to the last old top.
Okay.
And if you see a creeping trend, best to avoid.
See, I like that. And that's not only do I pick up those things, but I think for our viewers out there, that's great information to pick up as well.